Good morning, and let's see where we are. I was kind of writing my note and not sure where we ended up. Okay, so it looks like we're at kind of the top of the chop zone that I saw in the pre-market when we were lower. So just kind of those of you that get my daily plan mentally shift things up a little. Okay. That said, let's look at where we are and consider where we're going. And we had the ADP numbers at 8:30, which conventional wisdom tells us might have an outsized influence, although I don't really see much other than not bad equals good, I suppose. And the reason we're thinking about the ADP numbers is with the government shutdown, et cetera, we don't have employment numbers, non-farm payroll. So this gives some kind of a read into the whole employment versus inflation narrative. Will they cut in December? Won't they cut? Et cetera, et cetera. All the macro bros and algos and asset managers and all that, kind of like to pontificate about that stuff and maybe even allocate money based on that, which is kind of whatever. Anyway, so that's but be that as it may, it looks like it was a nothing burger. I want to take a quick look before I get kind of go through everything else. Where is it? No. There we go. I want to take a quick look at what happened. If volatility dropped at all with the numbers. And it looks like it dropped a little bit, nothing dramatic here. Here's VIX. Here's the SPX for some reason, which I don't want there. I want the VIX 9-day, which we're not going to see anything now because that doesn't start until after the open. So VIX and the VIX futures are kind of dropping. Now, usually there's a premium between the VIX and the VIX futures, the VIX futures being higher. So I don't know who's lying. I don't know if VIX is lying or if the VIX futures are lying. So either this has to come down or this has to go up. Either VIX or VIX futures have to, something's misaligned here. And there's been misalignment, for lack of a better word, in the VIX volatility space for a while now. And I may have time to talk about that later on. There's a whole other host of things going on in the volatility space, and the short version of it okay, good. And the short version of it is there's a lot of buying and trading in the VIX ETNs, UVXY, VXX, et cetera, which involves those products buying and selling VIX futures, mostly buying VIX futures and reallocating at the end of the day, which then results in market makers being short VIX futures And, and to balance that out, they then buy SPX puts to hedge their exposure, and it creates this cascade effect. And depending on which direction the balance goes at the end of the day, we tend to get these outsides 5 or 10 point acceleration moves to the upside and to the downsides. And that's exacerbated by the leveraged products. Think SPXL, TQQ, NVD, whatever it is, like the NVIDIA, 2X and 3X's, positive and negative. And so that's causing this whole added instability in that space, which is just kind of trickling over into this. Nomura and other people got notes about it. I did a write-up on it for my subscribers. Maybe I'll put something out if I have time. I just can't write everything that I think about, because I think about a lot. Anyway, so that's what's going on here. Right now, we're pretty much at the top of the chop zone. This CTA break, this is from a few people have roughly 67.80, give or take a few points. Nobody knows exactly. Where the trend following hedge funds have to sell or had to sell. And some would argue that some of the selling and instability yesterday and overnight was related to that. I'm not sure how much it is or isn't, but that's a key number. 6,700 is another key number. The longer term trend following ETFs, hedge funds, when I looked at the calculations that different people had like 6,600, 6,610-ish. So there's shorter term and longer term trend following ETFs, hedge funds. And so that's kind of adding to the instability or the uncertainty, along with volatility control funds, which allocate their assets based on volatility. We've had realized volatility go up, and so they end up trimming their allocation, and that's balanced with volatility. Sellers are still coming in, guys like me, but hedge funds not like me. We saw yesterday 30,000 contracts sold at 67.30, I think it was, or 40, 67.40. We just put a floor on it. Put a floor on it. And so we can expect them to come in today. And so that's kind of what's going on under the hood. Now, if we can grind back up and break through the 6,800 round number, get over the 67.80, if we can have volatility fail to realize today, that might relieve some of the pressure. But we're still kind of a coiled spring here. So now the expected move for today, when I checked earlier, and it's going to, come in as time passes by, it decays somewhat, was 67.20 and 6,800. And that was a 40-point expected move when we were at about 60. So we're up 20 points from there. And we're going to check the expected move again and see how that straddle pricing travels. Hope I'm not being too in the weedsy here. Okay, Doc. So what? A lot of jargon. WTF is going on here? Good question. I'll tell you. So, long-winded way of saying we're going to have this battle right here. There's lots of little lines and between 7,800 and 6,800. 6,750 is a big number for a lot of reasons. Market maker minus gamma at 6,750. It was a breakout number at the TA level once upon a time. We can see it better with this. 6,750 was kind of this breakout level. And it also happens to be roughly the 20-day moving average. I don't know what happened here. Other than that, there's no big deal. So obviously 6,750 is a big number right now. We're above it. And that could actually end up providing a nice tailwind for us. Why, you might ask? I'm glad you asked. Let's take a look at this. So this is options depth. And I'll review it like I like to do every day. Not everybody is laser hyper focused on gamma or on this particular way of presenting the gamma. And so this is market maker gamma exposure. Gamma is telling us how the market makers have to hedge based on SPX movement. Why do they hedge? They have to keep their delta exposure neutral in order to not expose themselves to market risk, to just make the money they make by selling and buying options. And you see this 67.50, that's the biggest strike on the board. So that's the key level, and it's minus gamma. Market makers are short there, customers are long there. Customers are long lots of puts. They bought puts at 67.50 yesterday as a hedge for whatever reason, I don't care. And so that becomes a possible magnet down if we get close enough, but it also ends up being an accelerant as we decay from here, sending us upward, sending us up. And so we have potential decay from down here as these options lose their value, as IV goes down, as we move away from them, as the deltas, minus deltas decrease. That is a structural tailwind today, pushing us up to where? Well, we have all this market maker positive gamma stalling kind of action, kind of right where we are, right where we're stalling in this range from 75, roughly call it yesterday's close-ish, until 67.95, 6,800, round number-ish. So these are the areas, the zones that we have to watch, and they're intuitive. It's not like, oh, wow, why that weird number? What's going on here kind of makes sense. Kind of makes sense. And so again, just as a reminder, bars to the right are market makers long gamma. What that means is market makers, let's just go from here, a cleaner example. As we approach, they sell, approaching from the bottom. As we approach, they buy if we're approaching from below. Mean reverting, going against the direction of the move, but that works both ways. So as we approach, they sell, but then as we move away too much, they buy. That's in a vacuum, pretending nothing else is there. And here, everything else kind of has to balance itself out. So the one thing, coming into the day, we had this, what I consider a fly structure, 67, 25, 50, 75, nice, clean fly structure to chop around in. And should we fail at 75, kind of come back in, then this becomes magnetic. And if it hits the fan, we can come back down toward the 25 and pull back in here. So this becomes a choppy zone. However, it looks like we're coming out of the orbit of this, and we're getting into this choppy area where we could kind of stall. Now, what's going to happen, obviously, is I guess obviously, is people are going to come in and buy and sell. These aren't huge numbers. There are 1,000 contracts. So if like a zero DTE algo fund comes in and buys 1,000, 2,000 contracts or sells them near here, the landscape kind of changes. We can expect within the first 15 minutes or so, vol sellers to come in selling puts and calls somewhere near here. And that'll kind of define the edges. Personally, when volatility gets elevated like this, I like it because it creates a structural tailwind. We also have ISM numbers coming in today at 10 o'clock. Now, remember, we had AMD, ANET, and we had a lot of Tech Mag 8 AI adjacent names reporting. The initial reaction in the post market was negative, but as I remarked to somebody that I was chatting with, what tends to happen is when we're near all-time highs on these names, it almost doesn't matter what the numbers are unless they're crazy blowouts, we tend to pull back. Like we saw with Meta, for example, although there was another story, like we saw with Uber, like we saw with Planeteer, like we saw with Microsoft. On the other hand, Amazon was 10% or so off its all-time highs, and they bounced. So I'm saying that to say this. Let's take a quick look, and I'm going to pull up Mental Q to get some levels. I have discount links for all of these. I guess haven't gotten them in. We're going to put Mental Q in here. I don't know why they're not loading. There they are somewhere. Now let's take a look at AMD as a default for what's happening. So it looks like AMD sold off, and now it's already kind of bouncing back. AMD is already kind of bouncing back. So let's watch the semi space. Obviously, let's watch NVIDIA below 200. Nice round number to hang your hat on. So we don't have a clear signal here one way or another. ANET, the stock that I like, poor thing, got beat up. Where is it? Let's see. Let's see. Poor thing got beat up. Also, a nice bounce back. Bought a few shares in the after hour, not as many. Bounce back 10 points from the after hours. Okay, so we're already getting a little bit of buying back of some of these extreme reactions. Speaking of extreme reactions, if we get back to SPX overnight. Good morning. I was wondering if anybody was here. I wasn't getting any comments. I was like, am I talking to myself? Which is fine. I don't mind talking to myself. So there is somebody here. Yeah, so overnight we clipped this bottom area here. I really don't know, like, if there was any news, if it was good structural stuff, we got weak. And then remember, overnight market makers still do hedge. And because liquidity is thin and the hedging, from what I understand, tends to be not quite as granular, but we have that big level, the 6750 to deal with. That might have accounted for that. All good. I thought there's a Dylan song from Highway 61 Revisited album. That's the same album where Like a Rolling Stone came out. Some of you kids might have heard of I've heard of him because they made a movie about him recently. And you might have heard of that song because a lot of people cover it. And there's a song on that album called Ballad of a Thin Man, very interesting song. And at one point, he says, "Oh my God, am I here all alone? Because, something's happening here and you don't know what it is. Do you, Mr. Jones?" Meaning like that he's got an awareness that other people don't have. But I digress. So the Dylan line resonated in my head momentarily when I thought, oh my God, am I here all alone? Anyway, so here we are. Oh, electric sweep. Yeah. Good point. Thank you. Electric sweep, maybe. I'm not sharing my screen on Discord. I thought I was. I'll have to get back around to that after I'm done with this. I thought I shared it in the morning. On your trades later today, can you come up with a few safe 1DTEs? Yes, I can. Let me rephrase that. I will do my best to. They're not always there, but they typically are. I like to do 1DTEs. And I'm happy to take them off the same day if I can, or kind of leave them to rot for the next day. Rot being a technical term. And here's some 1DTEs that I have that I did yesterday. Now I only have a few of them left. Now this one was originally like on Friday or on Monday. So this one took a little heat at 66.95, but it's okay. I'm not worried about it. It's down $88 today, but I'll be happy to have 20-cent buy to close on this one. I put this in yesterday. I'm just going to leave that alone. This one, I have 10 cents. I guess I'm getting greedy. I'll make it 15 cents. This is 95 cents. This is kind of still within the danger Will Robinson zone. So I decide what to do with that. Roll it down, leave it alone. I think I'm going to leave it alone. But this is the one I took yesterday as an example. This one is Legacy, before we had the big whoosh. For those of you watching, I don't know how well you guys can see this. But speaking of which, 1DTEs. So here we have a 1DTE that I did yesterday at the close. I typically like to go further and wider, but just to make it kind of safer, quote unquote, for the 5 wide crew. And these were done for about $1. So about a quarter the width of the spread, risking 4 to make 1 versus risking 20 to make 1. And these are doing fine. 40% profit. I like to take these off at 50% profit. This is an example. I put it in at the close few people tried to do it. I don't know if they did or not. This is for educational purposes only, of course, not investment advice. Yeah, and scalps. Now, my scalps, I tend to jump in. I tend to jump in and out kind of a little fast. It's hard to get them in. I'll kind of call them out as I see them. I called out a good one yesterday. I don't know who was listening. I didn't put in the trade, but I called it out. I forgot where, off of like 40 or something like that. Where was it? I called one out yesterday somewhere off of, I forgot where. Where's Tuesday? Somewhere off of the intraday low, somewhere off of 60, 65, 70, somewhere off of here. 66 or 60 was the low yesterday. Let me take a look here real quick. Yeah, I called something out yesterday somewhere in here. I don't remember. It was a decent one. Anyway, yeah. And I like to do flies. And let's look at some right here, right now. And this is just a placeholder I put here. I want you to see something. Okay, this was about $2 yesterday. I put 490 in so it doesn't close, so it doesn't fill. That's what I put in there as a placeholder. This was almost $2 yesterday. I'm kind of experimenting with some ideas, and it's around 90 cents now. So that experiment seems to be working out okay. So I like to do flies, like I said. So let's look at a couple of flies. And like I said, like I like to say, these tend to be forgiving. And a lot of times, if you just kind of hang on to them long enough, you get a whoosh down, a whoosh up, and you can at least get out for a profit. If not, have a really good trade into the end of the day. I'm not trying to pin the end of the day. I'm just trying to make a couple cents. And maybe having a setup for later. So 85, 75, 65. Let's go back to this here. And so this is a sticky area, so we should be stalling somewhere in here. And if we stall here, this is going to be choppy, sticky. Yeah, that's not bad. That's not bad. I'm going to put that in. On top, well, we know we have, again, not rocket science. We know we have the round number here, the 6,800 area. This is a little more expensive than I like to put in for one of these lotto trades. So I'm going to put in a little cheaper. 70 cents, see what happens. And then during the day, as things unfold, I kind of do some of these. Entering a fly. Any fly to shorts, I have to exceed the value. What do you mean by exceed the value? Shorts, I have to exceed the value. What do you mean by exceed the value? When you say exceed the value, you're talking about numerical value, dollar value, value on the value over here. More credit than debit. That becomes a whole nother kettle of fish. That becomes a broken wing butterfly. So these I'm paying a debit for. So it doesn't exceed the value. Now you could do a broken wing fly that I like to do that I haven't done in a while, where you could do that and end up getting a credit for these or make it, very cheap. You could do it asymmetrical by selling more of these, by doing a 3-to-1. You could make it asymmetrical by varying the widths. There's a lot of things you could do with that. And I haven't done those in a while or modeled them out here. I used to do it a little more frequently. So that's glad you mentioned that. But no, it's not going to be more credit than debit. These are 70-cent debits for your standard fly. So I'm just trying to catch where we're going to stall and get a little decay from here. Maybe get a little convexity, these going in the money, or even if they're near enough the money. I'm not going to hold it to the end of the day trying to get it here. Yeah, if you adjusting the widths to make it cheaper. Yeah, I mean that's kind of what you play with. Now you can adjust the width like this to make it real cheap, doing a 10 by 15. Of course, you run the risk of it running through it. Actually, 10 by 15 is a tried and true strategy that it can be a little tricky. You have to know how you're managing it. You have to know how I'm managing it. But there's really nothing wrong with the 10 by 15. Actually, maybe I'll even put one in later today for fun. Actually, I'll do one like that. I'm going to do one 10 by 15 for science. Ready? A 10 by 15 for science, making it for a nickel. I'm going to show them that I'm a sport and do it for a debit of 10 cents. So I want to get filled on this. We'll play with it. Okay. Yeah, so yes, you can adjust the widths to make it cheaper or more expensive. The wider they are, if they're symmetrical, same distance, the more expensive they are, but also the more room you have to be right or wrong. And the easier they are to take some off at a small profit. And again, by making it asymmetrical, a 10 by 15 or a 20 by 15 by 25 or whatever, then you can do all kinds of interesting things. Okay, it's 9 o'clock already. Let's take a peek where we are. Right now we're coming back. Oh, wow. So we're back here. So that 85. So let's take a look at that fly I had in here. That put fly. Where's the put fly? Well, we kind of are expecting to maybe get pulled toward the 50. So we kind of maybe want to get a little convexity toward the 50. But we have still, this is kind of a tricky one. So a 15 wide would be not that bad for a 15 wide. I'm a cheapskate. I'm going for the 65 cents, although this isn't really the cleverest based on the structure. The cleverest is you'd want to kind of have the 50 in your sight somewhere. I just don't think that that happens today. 70, 50, yeah. I'm gonna go with this one. Oh yeah, one DT butterflies, absolutely. Absolutely. And those tend to be lottos for me. If they work, they work. If not, then that's okay. I'm not, really worried about it. I have a one DTE lotto somewhere. You think I remember where? You crazy. Here's a two DTE lotto, 6,700, and it's like an asymmetrically one. And here's what I mean by forgiving. It's down 20 bucks, 30 bucks. I have a chance for convex payout. And, being a cowboy, I might sell something else inside it or around it. I think I have another one here. So here's another one. So I did this yesterday, seeing the 6750 there. It's not doing much. It's up 20 bucks. I got some decay in here. This is also kind of protecting me. So it's done somewhat defensively because I have these 6695s here. So it's kind of protecting me, giving me exposure down to 25 is where this starts to stall, where this could be worth $500, $1,000, or whatever it'll be worth. And this will, so this will act as a buffer and give me like breathing room. That was another reason why I put this on. This wasn't necessarily to monetize. It was a lotto plus defensive. The flies, I sometimes present at a target. Usually what I'll do with the flies is if they look like, they're going to be losers. Let's say the put fly and we kind of show some weakness, but it looks like now we're not really going there. And I'm down, I'm flat, I'm down 20 cents or something. I'll put it in at a target, try and make 20, 30 cents. And sometimes on the upside flies, if they're going in the right direction, let's just say I bought one for $1.25, I might put in 210 as a target and just walk away. I guess I'd leave it, not even look at it, and maybe come back later and look at it. So yeah, I tend to put in a target. I do tend to put in some kind of target, often not the very beginning. Often, a little later on, I get my other trades in, and then I kind of come back around to see. And for those of you watching on YouTube and on Twitter, the kind of banter you see here is kind of what goes on ideally in my Discord, either verbally or with text messages, whatever. And I'm an active trader. And so I do the best I can, considering that I typically have 40-ish SPX trades a day. Now, a lot of them are selling whatever spread 5 times and selling it again, selling, legging into and out of contracts, but still, I tend to be active, so I try to do the best I can at least narrate what I'm doing. And I do the screen share in in Discord, although they tell me I'm not screen sharing right now. So let's go in there and fix that. There you guys now can see it, look under the hood. I'm trying to screen share. Which screen do I want to share? Well, I can't find the screen I'm looking for. That's the one I want to share. So let's go back to Discord and share the screen. Ta-da! And so that goes on in the voice chat. Anyway, I'm going to rock and roll and see what else is going on and take care, everybody. I didn't put in my Substack and WHOP links. They're in my Twitter. They're in my Substack. If you're interested in seeking them out, DM me wherever or find them there. If not, that's fine. All right, take care, everybody.